So it is my honor to introduce Jock today. Jock, I think we do classify as friends now with the amount of hours we have spent getting to know each other and our businesses. So Jock has been in the accounting and tax business for the last 11 years. Previous jobs that he has had: barman, waiter, deliveries, academic archive assistant, and a stage manager. I would like to hear more about that stage manager part. He is married to Annemie and they have a beautiful little girl called Anya. They have 4 cats called Cammy, Magic, TC, and Sherlock. He resides in Boksburg and he's been here for 10 years. Some of his hobbies and activities include camping, photography, CrossFit, and music. So, what is Jock's burning desire? To help small businesses grow to the point where they don't need him any longer. So that is great, Jock. Then something that we don't know about him: he's a musician and a songwriter. I've heard some of these songs and they're really, really good. He has represented KwaZulu-Natal on a national level in freestyle and Greco-Roman style wrestling. And he had his first stitches in October 2021. So his key to success is get it done quickly and accurately. Proterra's top 3 services include bookkeeping, tax returns and planning, and annual financial statements. And then what is his unique selling point? Tax planning based on the big picture for shareholders, directors as clients. Who is a good referral for Jock? Good referrals are clients that are serious about following the advice they solicit from the service providers, and that will pay him on time. That is a very, very good referral, and I hope you get lots of those. Some of his accomplishments: BNI Vantage Power of One, winning the team member for August. He arranged a legitimate tax refund for an individual of 105,000 Rand. That's a big amount. So thanks, Jock. We look forward to hearing more about Proterra.
There we go. Thank you very much for that, Karen. Very fantastic, fantastic introduction. I appreciate it very much. So today I'm quickly going to mention or go through how to run a business financially. There's a lot of information that is being crammed into a short 10-minute slot. So if there's any questions that comes up out of this, I'm willing to book a one-to-one with everyone just to go through some of the concepts that we've mentioned. So you should know by now the quote from Jean Murray that every small business, no matter how small, needs a business and tax advisor. And so today I'm quickly going through in this presentation who we are, general good practice for managing businesses, then financial good practice for running businesses, looking at a few financial indicators. Then I'm also going to quickly run through a few tips for managing small business monies. So, we've got Calvaro, who is a certified chartered accountant. We've got Patty, who is on this morning with me. She assists me with data capturing and bookkeeping, and I am the owner and director of Proterra. We are associated with SAIBA, the South African Institute for Business Accountants, the South African Institute for Taxation, SITE, and we're proud members of BNI. So, general good practice. The first thing that you need to do is good record keeping. The first thing any business consultant is going to ask you is, do you know your numbers? And to know your numbers, you need to test and measure. Do you know your current gross profit percentage? Do you know your current break-even point? These are important questions that every business owner should be aware of at all times, because this could change. All right. A very good practice then thereafter is reporting. You want to keep up to date with your legal and statutory requirements, CIPC, SARS, the COIDA, the Commissioner of Occupational Injuries and Diseases, that workman's compensation, those things that Philip mentioned. Those are all part of your reporting, and it's good practice to keep up with them, because if you don't, business can be closed down. And thirdly, you need to have a business plan or vision or goals. You and your team need to know where you are going. And then fourthly, what ties into number 3 is your budgeting. This is to know what to expect, when to expect it, and where to send your money. Now, a general rule of thumb that I know a lot of businesses use is you take 50% of your revenue and allocate that to operations, take 30% and allocate that to business growth, that is expansion, new offices, new staff members, that kind of thing, and 20% of your business you go into new product lines, new services, that kind of thing, and actually expanding the product or service offering that your business provides. Then financial good practice number one. Most of our clients and most of the people that we will deal with are small businesses. They need to keep their business and their personal separate. Business expenses, personal expenses. You want to keep that separate. It just makes everything easier, much less of a mess, and that's good practice. You do that by paying yourself a salary. Separate bank accounts, pay yourself a salary. Number two is plan your expenses. You need to know where your money is going to go, and this is part of your budgeting. I've mentioned this before, it's a very good practice financially. And you want to include important things such as your growth, your development in your budget. You might want to make sure that they're there for the very simple reason that if you know you're planning for this, you will allocate your money to those sections, and eventually you will actually spend the money where you want to spend the money. And if it's according to plan, it's good practice, and your plan will achieve. The third option here, or the third good practice strategy, is to consider loans or overdraft. This comes in from budgeting. When you've got a good budget, you can expect seasonal cash flow problems. When you can forecast when it's going to be tough in the business, and you can resolve them with a short-term loan or an overdraft facility, or even when there is surplus cash flow available, to put that separately in a reserve. You want to be careful with overdrafts and loans, because going in it on a permanent basis and financing your operations out of short-term loans and overdraft facilities can become a problem, and the company can become over-indebted, and then it's not you'll have to go into liquidation, as the company won't be solvent. That is one of the risks involved there, but it's a tool that can be used, and if used properly, is a good tool. Some financial indicators. This indicates some positions in the company, and the first thing is your gross profit percentage. In the brackets, I've added a brief explanation of what the formula is and how to calculate this. So the gross profit percentage is basically an indicator to tell you whether your sales are actually contributing to the company's overhead. So your gross profit percentage is a very good idea, or a very good measurement for how successful your sales are and how successful your business is doing. The second thing you want to know is your net profit percentage. If this is a negative figure, the company isn't making profit. If this is a positive figure, the net profit percentage is typically the growth, the financial growth of the company's balance sheet. The current ratio is total asset or current assets against current liabilities, and this is your solvency test. The current ratio will basically determine whether you can meet your short-term liabilities and whether you run the risk of becoming over-indebted. Debtors days. This means how long your debtors take to pay you. Days sales in receivables is this is very much the same kind of thing. This is just calculated on debtors over revenue, right? It's essentially the same thing there. Then days purchases and creditors means how long you take to pay your creditors. Now, the difference between number 5 and number 6 in terms of days typically is what we refer to as the cash gap. So you would typically pay your creditors in advance to get your service or your products that you'll need to then adjust to sell that again to your clients, and then your customers, your clients, will take 30 days. So if your creditors are in, say, cash on delivery terms, and you pay that cash immediately, you sell that within a month, and then your debtors has another 30 days to pay for that, you're sitting with a 2-month gap in which you have to then carry your creditors, essentially. So you're carrying your debtors for 2 months, and that is the cash gap. And the idea there is, by knowing this, you want to shorten that gap. You want to shorten that period, because you can apply that funds better. than by simply financing your debtors. So your total return on operating assets, this means whether your company is essentially working on a profitable operational system, whether the overall company is profitable, or whether this is something that you are just doing to keep busy. All right. A couple of tips is you want to use mentors, consultants, and outside experts for the things that you don't know how to do yourself and you don't have time to do for yourself. Number 2 is to be organized. The more organized you are, the more structure there is in a business, the more things are going to go according to plan. You want to keep detailed records. I've mentioned this. It's good practice. You want to analyze your competition, see what they're doing, see what they're not doing, see what's working for them, see what's not working for them. And then after you've analyzed that, you can find out what is going to do better for you and what is not going to do better for you. All right, you want to consider and understand risks and rewards specifically associated to your business, your industry. What are the risks associated with your industry? What are the rewards specifically associated with your industry? And here I mention, or I'm not talking about just financial risks and rewards. I'm looking for overall risks and rewards, things that could determine your reputation in the society that you live in, your friends and family. What are they thinking? Also, are the rewards that you're getting from doing the work you're doing worth the risks that's associated with that? Then you want to be creative. Those who stagnate goes backwards. And if you are creative, if you don't innovate, you won't progress. You need to stay on top. You need to stay current, essentially, in order for you to have a competitive advantage. You want to stay focused on your business, and this is where your plans comes in. You want to sacrifice if necessary. Sometimes sacrifices are needed, and sometimes they're necessary. Not always, and I'll prefer to avoid sacrifices if it's possible, but you have to be willing to sacrifice things if it's necessary. Then one that is very sorely underestimated and neglected in South Africa, unfortunately, is customer service. Good customer service is something that's going to bring back new clients or bring back existing clients. Consistency is key. You want to have a consistent quality and a consistent structure, and you have to be patient. It doesn't take forever, but it doesn't take, Rome wasn't built in a day. So these are important things. Time.
Yeah.
All right. Thank you, Megan. This is just a service that Proterra offers. We do an outsourced CFO function, and this comes from 5,000 Rand upwards, where we help clients specifically with this kind of things as I've mentioned. There's a couple of feedback from some of our clients, reviews and stuff. They're on our Facebook page. You're welcome to look at that. There's my contact details for any questions. And thank you for the opportunity.